Good day, fellow investors. It's that time of the year, Warren Buffett, his conference, and I think the key takeaway is that he is waiting for something big to happen to deploy his cash. But the most common question was about tariffs, and I think I agree here with Buffett. It is not about being richer than someone else, it is just about increasing one's level of prosperity and safety and trade and everything. Everything that creates boundaries in that way is not positive for the whole, no matter where you are. A simple, clear statement, and then let's move to cash, Warren Buffett's cash, investing, and the market. His cash position now is 300, here 28 billion, a little bit higher depending on how you count for it, but he says that he is not in the business of doing transactions, he is in the business of taking the opportunities when they come, and now there isn't many of those. And here one can discuss, is Warren Buffett timing the market? Well, we can say yes, but also no. Because when it comes to what Warren Buffett says, now just deploying 50 billion per year on a must-invest basis would be the dumbest way in the world to invest. However, what he focuses on is that things get extraordinarily attractive very occasionally. The long-term trend is of course up, but very occasionally things get interesting and you have to wait for those things, wait for those opportunities to come to you. You don't know whether that will happen tomorrow, next week, next month, next year. Nobody knows, but it is not unlikely that those opportunities will happen in 5 years, and then the probabilities get higher as you go along. So when it comes to timing the market, I think many people misunderstand here. Timing the market means I'm going to sell my stocks because there will be a recession, I'm going to buy more because there will be an economic rebound or things like that. Looking for something that will trigger stock prices. But investing is different, and investing is about buying good businesses at a fair price. And if there aren't any, well, then you don't do anything. So, in a way you time the market, but on the other hand, it's just simple investing. And I think the key takeaway from Warren Buffett is that for now we have had no structural or market issues that create those great opportunities he's waiting for. If we just go back to 2008-2009, when he invested in Goldman Sachs, that was a great opportunity and he's waiting for those. And look at the staggering opportunity he had back then. He bought US 5 billion special preferred shares that would pay a 10% annual dividend. If they want to buy it back, they have to pay a one-time extra dividend. And then he also acquired warrants to buy an additional 5 billion of common stock at 115 per share. So it gives them the money, no bankruptcy, the market is scared, plus warrants. So that's the cherry on top of the cake and everything on how great this deal was. Then you think if you can buy Goldman at 115 and then it goes to 400 or 300, you know you have made a good deal. And Buffett also said that these kind of market situations like we are seeing now are just small market moves and not really market structural issues that could make him pull the trigger. Perhaps he's waiting on the private equity bubble bursting, because that is something also that he discusses as we discussed in this video. Because as he says, the world makes big mistakes and surprises happen in dramatic ways. And the more sophisticated the system gets, the more the surprises can be out of right field. Further, he discusses how he continues to hold a lot more cash and treasury bills than he would like, but it is simply a question of when opportunities occur. And if you get real opportunities every 5 to 6 years, you have to be patient. Also, Charlie says always that he made the most money of the 8 or 9 ideas of over 50 years. That's one pulling the trigger every 5 years. That's boring. However, if we look at Berkshire's cash pile, it's just really significantly up over the last few quarters. And if you look at cash as percentage of assets, it was at those levels a few quarters before the financial crisis, and now we are here a few quarters in, but nothing stellar, nothing spectacular, and he can wait, as we have seen here, even a few years before doing something significant. On the topic of private equity, there was the question on private equity firms entering everything, even insurance, and first Ajit says, as long as the economy is good and credit spreads low, they will make money. They'll make a lot of money because of leverage. However, this is key. There is always a danger that at some point the regulators come in, too much risk, they have to sell those things, and then those things end in tears. These are big warnings. Also, Warren Buffett discusses how sometimes it works, sometimes it doesn't work, and if it doesn't, they go do other things, while Berkshire could never do something like that. So it is clear that Buffett is waiting for those structural issues that might arise from who knows where, because the markets are unpredictable. And he's waiting to make his best deals when people are the most pessimistic. And that happens more often than you might think of. Then also issues might arise also from government this time, because the future of the currency is questionable because they can print currencies. Fiscal deficits are unsustainable, and we don't know whether that means 2 years of 20 years, because there's never been a country like the United States. But you know that if something can go on forever, it will end, as they say. So that is also the key. There are risks piling, and in the meantime, Buffett is waiting. And he's happy to wait. Here he says, there have been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a fairly short period of time. That's every 20 years on average. And this is also the fight I see in the comments, I see on Wall Street everywhere. There is the fight between let's make a ton of money now, no matter the risk, and let's watch the risks and pass on all those great opportunities. But I think the key difference here is Warren Buffett, 94 years old, is presiding over the Berkshire Hathaway annual shareholder meeting. He has been doing that for 60 years. Very few others that have taken too much risk are still doing that. So that's the difference between Buffett and all others. All others go bankrupt every 2 decades. Warren Buffett is still there. That's it. You just pick the line where you wanna be. Yes, you can get rich faster, but don't be on the other side on the get rich faster line. Just a quick note on research that I really enjoyed. So Warren Buffett reads about 50 or 60 financial statements every month of his companies. Like, there are many companies that he does. So he learns a lot through just reading those financial statements. And as they say, we are patient, looking at opportunities so that they can, when the opportunity comes, strike quickly. We all know Warren Buffett said that Greg Abel would have striked in 2020 and that he was perhaps too old. And as he now says, he will turn the reins to Greg, and therefore he might strike faster when the opportunity comes. Also here, something very interesting, at least for me personally, he spends more time looking at balance sheets than income statements, because the balance sheet over a 10-year period really describes the business you are investing in. So as always, great conference from Buffett, but the key message there is that the opportunities are rare and that shocks always come sooner or later. Investing is about doing boring things, waiting for those opportunities, and in the meantime enjoying the dividends from the great businesses you bought the last time there were great opportunities. Let's now touch on Berkshire earnings. Very simple, very straightforward. So as always we discussed, there is this volatility in the insurance underwriting profits, but we are there 9-10 billion. So 10 billion in cash created, 10 billion extra cash there, nothing spent, no buybacks because he doesn't see Berkshire as underpriced at the current situation. Therefore, when it comes to Berkshire, 4 times 10 billion, 40 billion. And then when it comes to valuation, underpriced, P ratio 15, 40 billion times 15 would be 600 billion. Yes, I know it's crazy, or 400 to 800 billion for fair valuation for Berkshire. But if we just look at the market cap now, if we look at the stock price, it was half of what it's now just 2.5 years ago. So it's not that crazy, and at these levels Berkshire would be, yes, a great buy. Now, given what's going on, the cash and everything, the safety, the stock price is up, so Berkshire is just on the expensive side. Now, don't get me wrong here, Berkshire will deliver good investment returns over the very long term, but it might not be 10%, it might be a good 5-6% protection from inflation, owning businesses, everything great, but don't expect stellar things from here going forward. The message for investors: if you have the urge to do something, well, you should be learning to watch paint dry. Simply, I think this chart explains what Warren Buffett is waiting for. Each time the stock market was as highly priced as it is now in the last 100 years, a 60+ decline followed for more than a decade. So Warren Buffett is clearly waiting for structural market issues to arise where then he can intervene with his money, or Berkshire and Greg Abel. Because that was also the surprise at the end of the party. Greg will be the new chief executive officer of Berkshire. Of course, we all knew this had to end. Warren Buffett at some point had to give the reins to someone else. I feel always happy when it comes to Buffett and his teachings and everything, but also sad because this story will slowly but surely end. I'm always looking forward, and I hope Buffett stays as long as it is possible with us, but we'll keep analyzing Berkshire. The businesses are great. Greg Abel will certainly do a great thing going forward, and we'll have a lot of things to discuss. Now, when it comes to Berkshire, I can talk for hours, but let me know in the comments which questions I haven't touched on, and then I can do a video really specifically answering your questions. Thanks for watching. Here is the Berkshire detailed financial analysis with margin of safety and everything. Watch that if you haven't yet.